Okay, hello folks, and welcome to this webinar hosted by FX Street. Today we are going to talk about good old-fashioned supply and demand, like always. We've been doing these now for quite a few years, and the material has been pretty much the same, has remained unaltered. We like to massage sometimes a bit of currency strength into it, but the common theme that we'll discuss throughout these webinars is going to be supply and demand and incorporating buy and sell zone into those. And so today we're just going to walk through like a really simple framework where we discuss a way that you can incorporate supply and demand into your trading independent of your existing model. Okay. So what we're going to do is, just before we go on here, I think it's really important to underline the fact that trading is not rocket science. Okay, trading is simple, or it should be simple, but I think that there are people who want to make it seem like some big black magic, but it really isn't. It's a pretty simple concept, actually. Essentially, you want to buy when something is cheap and you want to sell when it's expensive, just like you would do with anything else. Okay, but the fact that it's simple doesn't make it easy, and this is where the human psyche gets involved. We're all independent, we're all different, we're all unique, and so we react to different situations differently. Some people risk averse, other people embrace risk, and so the notion of being exposed to some kind of a risk in the form of, I don't know, corporate risk or social risk or financial risk doesn't shake many people, but there are also other people who are shaken to their core in the situation of uncertainty. Okay, and so this is where it becomes a little bit difficult. Okay, so you have to know where you are. You have to know if you're risk averse or if you're someone who embraces risk, and you have to trade accordingly. Okay, and this is a I think this is cornerstone to successful trading, is that you need to know how you are as an individual, how you'll react to certain situations. If you're in a trade that's losing money, are you nervous for the entire journey from the entry to the stop or the target? Or are you like a free spirit? You get into the trade and you don't really care less if it's a winner or a trade. You just let it play out how it's going to play out, because this is super, super important. I myself, I'm quite risk averse. I don't like to risk enormous amounts of my account per trade, and so I try to keep things under 1% per trade. I know other guys who risk as much as 5% per trade, which I think is which is a lot. That's very uncomfortable for me. Sometimes I risk, if I'm trading a larger account, I risk 1/4% per trade, because that's just how I roll. And so you have to know how you're feeling. Okay, and so most important thing is you have to know if you are if you like risk or you don't like risk, and this is just effectively going to affect your position sizing. Once you know that, then of course you need to know what to do, how to trade, how to get into trades, and how to get out of trades. And what I like to do is I like to focus on something that I'll call an origin. Okay, and an origin is essentially a move. So you have, this here, this is an origin. This is the origin of this move here, and this is the origin of this move here. Okay, and this is the origin of the entire move here. So here we have a macro move, which is from this low to this this high. Then here we have two micro moves where we have price moving up and then down and then up. Okay, so this is just a correction within this upward move. And so when I refer to something as an origin, I'm simply referring to a visible turning point in the market. This is not an origin on this 4-hour graph. This is just this is a pullback. Okay, and so while you have many smaller swings in this move from the low to the high, you also have many small ones where you have one here, it goes up to here, and they go up and down, up and down, up and down like this. And this is very, very normal behavior. And so you have to know where the major swings are, because the fact that you have, let me see if I can draw, the fact that you have price that left from this area here and price that left from this area here, the fact that price actually left and turned around from here and from here is telling us something about, let me see if I can write, is telling us something about what's going on below this low and what's going on below this low here. Okay, this is super important. And if price was able to move, let me remove these. Okay, if price was able to move all the way up to here, from here, if price comes below this line here, so let's say it comes kind of below this point here, well, you would expect that price would potentially attract more buyers, because when price was down here, we moved all the way up here. So what about if price comes down to this area here or this area here? I mean, this is a better price than this, and this is a better price than this. So the lower price goes, the more people are going to be willing to buy. The higher price goes, the opposite, the more people are going to be willing to sell. Okay, so what we need to do here is we need to identify moves, these strong moves. And we have the strong move. We have one from here to here. This is where it is here. I'm just going to remove the software here. So we have a move like that. And then we have these small moves that go from here to here. Let me change these so they're not raised, like so. We have another one that goes like this. And another one that goes like this. Okay, and so you can see that we had a turning point here as well, where price went up to this high and it went down to this low, and then when price left this low, we moved above this high here. That is also telling us that we have the flows that are moving higher. Okay, so we had enough strength to move price above this swing high. So that tells us that we have an increase in the flows moving into the euro and out of the Singapore dollar. This is just a random example. Okay, and the opposite occurs when we are in a downtrend. If we look on the 30-minute chart, you'll notice that we're going to begin to start moving into a downtrend, maybe even the 50-minute. You see that price is starting to move lower, where we have price moving from the high here to the low here. And so we had these lows, we had this low here, and price bounced on it, we sat on it, we pulled back the slingshot, and then we left. And so this is telling us something about this area above this high, which I refer to as a slingshot, because price was not able to go below this line here. This was support for price. Price came down to it, pulled that the slingshot to this area here, and this is where price released from. And so this is the origin of this move just here. Okay. Okay, let me remove all of these. So I'm just going to try and cook this down into a few easy steps, and then we will get a notepad out. We can talk about this. So what we have to do, okay, I just want to type this in here. Okay, so what we have to do, we have to find the origin of a big move. Find the origin of a big move. Okay, which is, let's do that here quickly. So we have, let's just do like a proper move. Okay, so we have the origin, which is here. So this is the origin of the big move, just here. This is the origin just here. I'm just going to circle that like so. Okay, and then you have to look at, see what price reacted to at the origin. So let's have a look at that. Okay, so we're going to go down. It's going to put a line. Then we're going to go down to a smaller time frame, maybe the 15-minute chart. We're going to scroll back, and we're going to have a look and see what price reacted at. We find the absolute low, which is here. And then we want to find out what price bounced at. And you can see here the price reacted on this here. So price went up, we pulled the slingshot back, and then price went higher. So price is actually reacting at something in here. We can't really see exactly what it is. Let's zoom in a little bit more, and you can see that this is interesting, because on this, just here, you can see that above that we had these wicks. And so these wicks coming up and testing this area here is telling us something about something in this area here. So we had pool of liquidity up here that people were happy selling at, shorter term. Okay, so price is going up, we're coming down. We had a very difficult time moving through that. And all of a sudden price went up. We did not manage to move above this high here. But when we came down to this area here, this is where price managed to release from. So let's mark off this high, this low, the pullback, which is essentially the slingshot. Remove this one, and then we're going to go out to the 4-hour chart and see what that looks like. Yeah, you can see pretty clearly that this is showing us very clearly price returning to the origin of this micro slingshot over here. And you can see this actually on the 4-hour chart. It's very clear. We have a very, very clear area of demand like this. Okay, price went up, slingshot was pulled back on this time frame. We revisited. This is the child. This becomes the child. This is the parent. Okay. The difference between a parent and a child is simply a child is a reaction to a parent. A parent is an independently established area of supply and demand. So this is established, the slingshot. We moved back into this pool of liquidity, which is a parent, then we left. We had another test at the child. We went a little bit deeper. And this is the important thing. At each time, we've established a buy zone, which is essentially where price returns to before it releases. This is the most expensive price that you want to pay for an asset. Okay, so if you look at this, price was here, price came to it almost to the pit. It went a little bit deeper through it. So then you would move it lower to the lowest low since then, and this becomes the beginning of the buy zone once again. Price pokes into that. Okay, and then once again, once this happens, you want to move it down to the deepest retracement. And this is important because in this little blue box, we have liquidity that's available for sale. And at this price point, when price pokes into this, the deeper it goes, the more buying there is going to be. Okay, and so if you've seen many of my videos, either on FX3 or on YouTube, you'll notice that I use the analogy of a pancake, a plate of pancakes, where if you have a plate of pancakes, okay, a fork, it comes down to the top of the stack, is able to take the top pancake. Once the top pancake is removed, it has to go deeper to the next pancake. Once the second pancake is removed, the fork has to go deeper and deeper. And so price probing into a pool of liquidity like this one is simply like a pancake, a fork moving into a pancake. So price went down to this one. So the pancakes above this red dotted line are gone. So price has to go beyond that, has to go deeper to find the next pancake. Okay, price went a little bit deeper here. You can see this candle here gap down into that. And this is where it left from. Price left. So this is essentially where the buy zone is for this area of demand. And if we just mark that one off, let's go like that. This becomes a target for the future. Okay, price came down to here, and this is where it left from. We can do the same thing above price, where we want to find those pullbacks into areas, because this is important, and this is telling us where it is. So we have wicks coming up into here. I'm just going to mark these off, like so. Tested, rejected, tested, price went up, and it managed to go through it. So the new area is this one here. This is the one that we would look to trade at. Price tests it, it comes down at 6 on it. We try to move through it, and we gradually manage to gnaw through the liquidity available at this price point. And if we have a closer examination, notice that we had the buy zone initially here, because this candle left this one. As a matter of fact, that's incorrect. We actually have two areas of accumulation, this one and this one. This candle closed above these two. So these two are accumulation, and this one is the candle that left. How deep did the candle go before it left? It actually went almost all the way through the area. Okay, if we just mark these off like so, it went all the way through this area. So this is actually where the buy zone is. We have, upon releasing, we have a buy zone that is here. Price tested, it went deeper, so we move the buy zone lower, which moves us into the bottom end of this wick for this candle that released this area of accumulation. And then here on a smaller time frame, and we can have a look on a smaller time frame, there is going to be this exact same thing going on. So let's go maybe to the 1 hour chart initially, and then we can dig deeper. So let's have a look. Okay, here we still have that wick. just here. There's not a lot of clarity, so let's have a look on the 30-minute chart. Now it's starting to resemble something where we have this candle is the accumulation. Okay, this is the accumulation because the close of this candle is outside the range of the previous, and the close of this is outside of the range of the previous. So it actually looks something like this. Okay, and this is roughly where price came to. We went a little bit deeper, and this is where we turned away from. But if you pay attention to this, oops, I want to keep these lines on. I just want to remove the rectangle. If you pay attention to this, you can ask yourself the question, has price already been back to this price point? It has. It's been back to this price point here. What does that mean? That means these pancakes at this level have already been taken. And so we have another slingshot, which looks like this. Here's the candle to the left. This one is in the range of the previous. This is in the range of this. All of these are linked together. And this is the one that stops. So we go from this candle to this candle. Okay, this is where it stops because this candle closed above this one. I'm going to make sure I still, okay, I'm tethering my internet. We don't yet have internet in Spain, and so my telephone stops after a gigabyte. I just want to make sure that I'm still getting quotes. Then I know that I still have a connection. Okay, so now we're looking at this area, price left. You can see the family of accumulation includes this candle, this candle, this candle, and this candle. Not this candle, because this candle closed outside of the range of this one. So it's actually looking like this, like that, to the low, which is here. Okay, so this one is gone now. And notice here the slingshot is actually the low of this candle here. You have the demand, slingshots pull back, the buy zone is established right here. So this is where we can expect price to react in the future. So if we have a look, yeah, we had a small reaction there. Price poked into that, then we went up here. And also notice that when price came from up here, we managed to close below this area. So we better have a look at this area here a little bit further to see if there's a parent-child relationship. And there is. You can see that this one is established independently of any other area. This one is a reaction to this one, and this one is a reaction to this one. So this is just price feeding on these areas. So we want to have a look here. See this, these are all linked together. The body of this is in the range of the previous, same. So we have from here to here. Okay, this candle, which candle left? This candle left, it closed beyond, so the low is going to be the high, just here. Let's see how we did. It's pretty close to it, very close to it. But now notice that this entire area is gone. So it's been removed. And so we have to do the same thing again for turning points. So we want to find the origin, another origin. And where do we have another origin? Well, if we zoom out a little bit more, we have an origin which starts from here. We go up to here. So this is an origin, which is essentially just a swing point. Okay. And we have this range of this. The close of this is within the range of the previous. This one is the one that leaves. So we go from here, the lowest low, to here. This is where, oops, price goes to. If I can get it to stay. Come on. Right to here. And this is where price went to. We had a bit of a bounce. We tested it. We tested it. Our price is coming down. We're trying to poke through it. And you can see this candle here closed beyond this one. So that's telling us something about the strength of price up here, how it's moving. We left, we moved sideways, these wicks going up and down. What's that doing? That's consuming the liquidity available in this area of micro demand here. This is the 30-minute chart, so I refer to this as micro demand because it's not terribly significant. Okay, we have this little pattern as well. This is actually, I hope, because this is a reaction to the parent, which we can see starting at the beginning of this blue box. So let me check these quotes here, still coming in. Price tested it once, tested it twice. You see price having a go. It's trying to remove it, trying to feed through it. We succeeded. And it originated from here. This is the area that did it. Okay, this candle here is the one that left. The high of that candle is here. So we actually have a small area of supply here. Just here. When you look at this, these wicks, the wicks tell us something about the movement of price. If you have a wick, this just means that price is doing a lot of this. Okay, wicks are telling us that we have a lot of volatility in price. Okay, it's originating from here, and you can see that we had a lot of volatility here. So let's go down to the smaller time frame and have a closer look. You can see here that we actually have the slingshot, which is up here instead. So we have this small area of, oops, just here. We can have a look on a small time frame in a second, but the sell zone is now here because the slingshot was pulled back to here before it released and consumed the area of demand that was back here that this is a child of. So it originated from here. So let's have a look on a smaller time frame once again and see if there's anything. Ooh, downloading quotes. Okay, so here you can see something more. Is we have an origin of a move. This is a move. The origin price went from here all the way down here, and we managed to remove some micro demand here. It was tested. It went down. The slingshot was pulled back, and then we released. Okay, so here's another point, and that is when price is able to move through, excuse me, an area of supply or demand, you have to look for the origin of the move. So this price level here has been removed. It was tested. You know it is demand because it was tested and respected. The origin of the price move that moved through it is here. When price was able to come back up to this level, we distributed liquidity to a degree high enough to remove this area here. So this one consumes this one. This one's gone, and this becomes the area that we look to sell at. The sell zone is here, just here, because here we have two distribution candles. The slingshot was pulled back to the high of this candle, maybe a little bit lower, like that. So this is our reference point for future tests. Price comes up to it, and then we leave. Okay, and the same thing happens over and over and over again. Let's have a look at this one just here. Make sure I still have data. Yes. So price is coming through. Let's focus on this one here. So we had a nice push higher. We had a small reaction here. It was tested. Price went down to it. We didn't manage to close. We just went barely through it. This candle tested it. This candle closed below it. So you want to go to the origin of that and the high of the area, which looks like that. So this is the area that removed it. Okay, but if you look at these two, you can see immediately parent, child. And even if you look at these wicks here, these are pretty wicky, these candles here. So that would make me believe that there was some micro parents above price here. So I would be inclined to have a closer look, number one, in this wick, because here we have, this is an origin, how price went up and then went down. So this is an origin of this move. And so I'd be keen to have a closer look within this. And let's do this for fun. Okay, the 1 minute chart. So if we have a look, we're on the 1 minute chart. Let's zoom out so we can see our original levels. So I'm just gonna put the software on so I can. Okay, so we have this one here. Price came to. Okay. So price came to this area. We tested it. The origin of the move. Let me just very quickly turn this down. So price managed to move through that. Almost it came from here. And so the origin of the move that removed this area of micro demand is here. This one removed it just here. Okay, so this is the one that we can expect a reaction at. If you look here, you have to look for those, the beginning of the sell zone. The beginning of the sell zone are attempts to revisit an area of supply or demand. Here we have supply, and this is an attempt to revisit this area. Here we have another one, but they failed. Okay, so now this is the price sensitive area, the 1.6154, and this is an area of supply here. A really nice push, distribution, and departure. Attempts to move higher, failure, attempts to move higher, failure, and then price slowly drifts lower. And we have the same thing happening here on the 1 minute chart where we had an area of demand just here, right here. It was tested, and now it's been removed. Okay, what area of supply was capable of removing? What was the origin of the move that moved through this area of micro 1 minute demand. It was this one here, something up here. And if you look here, we have the supply. The slingshot was pulled back to here. This is where we left from. So we have the sell zone and the supply lining up beautifully. You can see just here. So this will probably see some kind of a reaction on price. Okay, so it's just a really nice way to walk through price step by step, bar by bar. And this bar by bar analysis will really help you understand what's going on, because it's forcing you to look at areas of supply and demand that are responsible for consuming other areas. And this is important because volume in the retail FX space is difficult to gauge because the market is so distributed. And so the only thing that we can look at is what areas of supply and demand are able to accomplish on a price chart. And if you look at, let's go to the daily chart. If you look at this one here, price rallied, we accumulated for a short period of time, we pushed up to this area of supply, the slingshot was pulled back, and then we left. So this is an origin. This is a very powerful origin here, and it removed this area here. Okay, the beginning of the buy zone is where? It's just here. So here we have demand. Here we have the buy zone for this demand. Okay, and so we know that there's strength down here because when price left here, look how far up we went. And the origin of this move is right here. We have the same thing happening here. And if you pay attention to this little area here, this dotted box here is consumed. It was tested a few times. We have this area here. And this is actually the area of demand that is responsible for consuming this area of supply. So this becomes a reference point in the future. Now and again, we have to look for the wicks that poke down, attempt to revisit an area. Let me check the quotes, make sure I still have data. Yes, we have one here. Okay, so we have a push away. We have an attempt to revisit that area a little bit higher. This becomes the buy zone. So this is our reference point for price-sensitive areas in the future. Price leaves. We're going to get all sorts of these areas all over the place. Here we have an accumulation candle. Okay, so this is demand. Price moves high, we test the demand, and then we depart. But this is the buy zone for this area of demand. So this is our reference point for the future. Price comes to it, we have a reaction. We go through it, but we don't enter the demand. We simply pierce, rather we move into the buy zone territory, and this is where we depart from. Okay, let's have a look at one more example. Let's go to the monthly chart. And I'll see if you guys have any questions and things you want to discuss. Okay, so let's have a look at. Okay, let's have a look at this one here because this has not yet been tested. Okay, so we have. You can see we have a lot of wicks, attempts to test, attempts to move back into an area. We don't know what's in there, so we're just going to kind of take an average of the lows and we'll go like that. It's close, we'll put it like that. And we're going to go to the daily and see what is actually in that area. Okay, and you can see that we can't see it on this one. It's there, we just have to go hunting. Here it is, it's right there. This candle here, this is the distribution. This is what price is testing. Tested a bunch of times, and now it's gone. Okay, so what area of demand is responsible for removing this area of supply? Where did the candle close above the area? So you follow the candle over. This candle closed above. What's the origin of this move? It's this one right here. So this is the area that we could expect price to react to. Then you ask yourself the question, is this a parent or a child? It's actually a child. Why? Because we have an independently established area just here. So this is our area of interest. Just here. The child did see a reaction. The parent also saw a reaction. So both of these are work, but the parent is more profound and is more heavy hitting than the children are. Okay, so price test one, we eventually move through it. This green candle here moves through it. We close below it. Sorry, we open on the other side of it. And price moves to the thicket of liquidity, which is located in the parent, and this is where we remove from. We mark off the buy zone, which is here. Price comes to it. We come a little bit deeper to attract more buying, and this is where we see it. We're in probably the lower third of this area of demand. Make sure my data, yes. And this is where we're released from. Okay, so this is price releasing. And you can do this over and over and over again. The one thing you want to look for is you want to look for areas where price has historically respected a price point, and then where it was violated. And here we have something. We have a test, 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 and then price is gone. And so you can actually see this is actually a 4-hour area of supply. It's right here. It's been tested. This area here is the one that removed it. This one right here. And you ask yourself the question, I'm just going to go backwards here and just ask yourself a question. What candle closed beyond it? So you follow the top of the box. This one did. Where's the origin of the candle? It's this white candle right here. So you just move this over here. We'll mark it off correctly. And that's it. Okay, so we can expect a reaction at that point there. But then before you do anything, you ask, is this a parent or is this a child? As a matter of fact, this is actually, where are we? This is actually a child, because this is reacting to this. Let's make sure. Yeah, it's pretty close. And so you could argue that this was the parent. Here, the beginning of the buy zone is the deepest retracement since the close of this candle, which is somewhere around here. Okay, so this is probably a place where price is going to have a bit of a test and a bit of a bounce in the future. And you have these all over the place. I mean, here, you have price testing an area. Okay, price tested. We did not manage to violate this area historically. This one closed above it. But the difference with this one is we have to look very far left to find out what area of supply these accumulation candles are beginning to gnaw away at, which we cannot see on this time frame. So we shan't go over it now, but this is what you'll have to look for historically to the left. Okay, and then price is wriggling higher. We have this area of demand here. The beginning of the buy zone, simply put, is just here. So we're probably going to have a bounce at this area here, the 160.50 area. Okay, good. That was kind of all over the place, but I just want to see if anyone has any questions. Does anyone have any questions about the stuff that we're going over? Hey, Joy, is this as clear as mud? Is there anything else you want me to elaborate on? That was kind of a random walk. You just type your comment into the post here. Good. I'm just going to have a look at something else. Let's have a look at another pair. Let's have a look at the Euro American dollar and see what that might look like. See what it might do. Okay, so first of all, let's go to the weekly chart. Where do we have an origin of a strong move? Well, we have an origin of a strong move. Actually, you can see here we had an area of supply that was tested. This candle here, right here, removed it. So the origin of that candle is right here. So I'm just going to mark that whole area off. That's a big one. Then we're going to go to the smaller time frame and have a look. It's a bit messy, isn't it? If you look at this, you can see there's a lot of sideways price movement here. So but what you can see is we have something in here. We have a lot of testing. This candle looks like it managed to move beyond it. And so that would bring our attention to lower. Here we have the candle that moved out, closed above the previous accumulation. The slingshot was pulled back to here, and then we left. So you could argue that this would be an interesting area to interact. But looking at this, you can ask, has price already been back to this price point historically? You can say, yes, it has. It's actually been here quite a lot in the past. See, we traded at this area a whole lot. And we have these wicks, and wicks are notorious signs of liquidity being consumed. And so ideally, we're going to want to look a little bit lower. So looking a little bit lower, let's make sure I still have data. Yes, you want to look below this. You want to look for spots where price has had a tough time to move beyond and then consumed. And I can see one right now. So we have white candles here. You can see tests here. Testing, failure, testing, failure, testing, failure. Slingshot was pullback, rally accumulation, departure. So here we have a glorious buy zone. We have a nice area of demand. The buy zone is right here. So this would be a nice place to buy the 1099. So about the 1.1. The 1.1 area. This would be a nice area because price had a difficult time moving beyond this area historically, and we finally left. And there's just a nice clear departure here. This is not a clear departure. This is price having a tough time moving higher, which you can see very clearly here. Good. All right, FX Street, what do you reckon? If nobody has any questions, I think we can wrap things up. If there's anyone that wants me to look at something, I'd be glad to do so. Just going to put an alarm here. So I'm alerted at the fact that price comes up to that area. What do we reckon? I'll do one more. Let's have a look at the Australian dollar. Okay, so here I'm going to do the same thing, where we have a price point. Price had a tough time moving through. You can see we had that here. We had an attempt and a failure, attempt, failure, attempt, failure, and price finally did it. So we have our area of supply is here. The area of demand that did it is right here. So this is probably a good place to look to get out of this trade, potentially. Or this one here, which is even more. Okay. Because if you look at this, I mean, this is a nice departure, but this is a lot of trading below that area. So this could be like a massive period of accumulation, building orders to drive price higher. We don't know. We also have market structure that is moving higher. If we break this trend line and we move below these lows here, well, then there's a high likelihood that we're going to continue lower to an area, a price point where we are going to be attracting buyers. Okay, and this looks potentially attractive. This looks much more attractive down here. Okay. Good. Good. Okay. Right. Just going to see here if I can see anybody in there. Good. Well, FX Street, if there are no questions, and I'm going to wrap things up for today. I want to keep this relatively short. There's no one. Yes, good, good. Let's do that. Super. Okay, well, thank you, FX Street, once again for hosting this. It's a pleasure. It's a real pleasure. But I'm going to go and have some lunch now, I think. And thanks, everyone, for watching. And we'll see you again in about a month's time or 2 weeks' time.